Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. We've got two big things going on today. Number one, Palantir's stock price hit a new 52-week high. We're going to talk about stock price action, what's happening for why the stock is going up so much today, about 13%. And BP, one of Palantir's earliest commercial clients, has signed a 5-year extension with the company to implement AIP. A lot to talk about. Let's get into it. All right, so today is the first day that Palantir is trading post S&P inclusion. Now, we are not literally in the S&P yet. That is going to take place on September 20th when the rebalance happens, but the stock is obviously trading as if we were in the S&P 500. There you go, 3460 on the screen right now. I mean, it's up 14%. It's one of those days where the stock's up a lot, and you kind of just look at the stock all day and you're like, well, that's a lot. There's the candle right there on Palantir. As you can see, we were in the pre-markets at around $32, $32.80, and then we just jumped up all the way, kept jumping, had another jump right here, and then slowly made our way to $34.59, up 14% on the day. So price to sales of Palantir now 31.22. PE is 203. Forward PE is 104. Market cap is $77 billion, about double the market cap of Snowflake. Shares are up 14% on the day. Now, why is this happening? Number one, S&P 500 inclusion happened the announcement happened on Friday. I made a video detailing all of the implications and why that stuff matters. I'll put that in the description so you can check it out. But essentially, I think the market is front running what they know is inevitably going to happen. Now, I'm still waiting to do some math. And if you have any math on this, let me know in the comments. I'd be curious to see what other people are thinking. But from some of the reports I read, there's going to have to be about 150 to 200 million shares bought of Palantir once they get rebalanced by fund managers across the world to match their allocation weightings and sizes for their fund based on the S&P. Now, that could be potentially wrong. That could be less shares. That could be even more shares. I'm not exactly sure what it looks like. It also is very contingent upon what the stock price is because that determines the weighting of the actual stock within a fund manager's portfolio. But the point is, historically, when a company gets introduced into the S&P 500, fund managers have to buy the stock. And the market front runs. We saw this with Tesla when it went up 30%. CrowdStrike went up 15%. SMCI went up 20% as soon as they got included. When you get included, traders essentially front run all of the buying that's going to happen. That buying does help the stock, but the front running of all of that buying, because people know, hey, institutions are going to have to start buying the stock, that's what gets people interested. And obviously, that's what pumps up the stock a little bit more. Now, in terms of the people that are experiencing FOMO right now, because I've gotten a ton of messages today, like people literally saying, hey, is it finally time to start initiating position at 33, 34? I cannot answer that question. All I can do is offer the due diligence that I've done around this company and talk about the journey of what Palantir is, understanding the company, going through the deals like we're about to go through in the next couple minutes with BP. And then you have to make that decision. Do you think this is an attractive entry price? From my perspective, I do think shares that are now up more than 100% year to date. Yes, literally more than up 100% year to date. So if we take a look at the stock right here, again, up 108% year to date. Pretty incredible. For those saying again, hey, should I buy? Have I missed the run? Should I start initiating positions to Palantir? Only you can make that decision for yourself. But at the end of the day, if you're buying it at 34 because you think it's going to go to $40 next week, it's just like, that might happen, but that also might not happen. If you're buying it at 34, because if you think 10 years from now it could be 300, I think that's more reasonable. Or 10 years from now it could be 200, even 150. And obviously that would be a phenomenal return from an average of $34. But in the short term, buying a stock up 100% year to date is not an easy thing to do. Obviously, if you want it to go up another 50 or 60%, a lot has to happen fundamentally for the company to get there. But I think over the next 10 years for the stock to go up 30, 40, 50, 60, 100, 200%, whatever your kind of metrics are in terms of the TAM you think Palantir can address and then their ability to execute against that, that is more likely to happen. But for those that have been in the stock for a while, for those that have been in it since the $6 days, for those that have been in it, even if you came in at $20 or $15 or $16 or 27, 23, I think today's not a day to reflect on like your average or your overall net worth increasing because of Palantir. Today's a day to realize, holy crap, the company that was not supposed to be the company that is turning into what it is actually turning into the company that we, retail, thought the company would become. And that's just exciting. That's just really exciting. There's not many moments in life, again, where you bet on a company and you see them end up doing what you want them to do. and they execute against the thesis that they completely were wrong in their sales and go to market for almost 15 months. And a lot of us on this very channel on Palantir Weekly, every single week, we were critiquing them. How do they figure out sales and marketing? But you believed in Carp, you believed in leadership, they were able to execute. And because they were able to execute, they are now signing partnerships like they signed today with BP for 5 years because their clients feel that they're getting transformational value. And then the stock is just a byproduct of the company executing against that transformational value. And that's why the stock is up 14% today. It's one of those days to look back and reflect. Maybe the stock goes to 35 tomorrow. Maybe the stock goes back to 32. The point is, I think over the next decade, this is going to be a very fun journey. But we're seeing that Palantir is absolutely ruthless with their execution to make sure they legitimately provide value to their clients, which is why they keep coming back. And that's why it's just really fun to continue to be Palantir investor. All right, let's get into the BP partnership we got today, folks. This was a pretty big one. 5-year extension on the day for Palantir. Here we go. Palantir and BP agree to a strategic relationship with new AI capabilities. I want to read a little bit from this, and then we'll do some analysis. The new contract will build on a decade of deep collaboration that has created the firm's foundation for BP's oil and gas production operations using Palantir's industry-leading software. Since 2014, Palantir software has been deployed widely to BP to support its oil and gas production operations from offshore oil platforms in the North Sea and the Gulf of Mexico to the Kazan gas fields in Oman. During that decade, it has supported BP's digital transformation program with a focus on delivering efficiencies in the oil and gas production system. Central to that program has been the development of a model-based digital twin of BP's oil and gas production activity, enabling performance improvements. This entails the integration of dynamic digital physical asset models with real-time data over 2 million sensors integrated into a single operating picture through Palantir software. Now comes in AIP. Palantir's AIP software will assist BP to safely and reliably harness large language models, or LLMs, to improve and accelerate human decision-making with suggested courses of action based on automated analysis of the underlying data. Within the software, the robustness of the underlying data infrastructure and digital twin are combined with tools to ensure transparency into AI recommendations. This means that the software is designed to enable safe and reliable AI deployment and guard against hallucinations, which is obviously very important when it comes to oil and gas. Meanwhile, security features control what LLMs can and cannot do with fully auditable digital records of any decision or actions that are taken. Matt Babin, who joined Palantir Spaces with myself, Ileano, Chad, and Arnie. I'll leave a link to that full hour-long interview we did with him on Arnie's channel in the description. But he commented, he is the global head of Palantir's energy and natural resources business as well. He says, "We are incredibly excited to continue our strategic relationship. Going forward, our objectives together remain the same, further enhancing the efficiency of BP's operation while increasing data integration. Now, AIP offers the opportunity to help accelerate human decision-making on top of the robust digital twin and deep operational workflows already in place." And it makes sense, you're working with the company for a decade. Now integrating AIP obviously has a head start because of that ontology. Sanjay Pandey, the SVP of Digital Delivery at BP, says, "Our strategic relationship with Palantir will continue to play an important role in supporting the ongoing digital transformation of BP's operation. The use of advanced digital twin simulations helps us to safely monitor and optimize various aspects of the production process to enhance operational performance. We look forward building on the progress we have made over the years with Palantir." Okay, so why is this interesting? There's 2 points of analysis I want to make, and then I'm going to end off this episode of Daily Palantir with a clip of Matt Babin, the guy who we just heard from in terms of his quotes in the press release, who did an interview with Yahoo Finance for 7 minutes, went a bit more in depth on this partnership. So that's how I'll end off the show for today. But overall, this was a really good partnership for 2 reasons. Number one, 5-year extension. We've seen extensions with Eaton. We've seen extensions with Sampo. We've seen a 7-year, $50 million extension with Tampa General. I don't know how much this is worth. We don't have an actual dollar figure on this, but this is one of Palantir's oldest clients. And because it's one of Palantir's oldest clients that has been working with them for the past decade, you would imagine that not only is this going to be a heavy contract, but also it's a major sign of confidence to be agreeing to extend that relationship that you've already spent building a decade for another 5 years. And then after that, I would imagine that they're going to keep working with them for another 5 years. This is the Palantir thesis playing out. Provides so much damn value that it is impossible for an organization to say, we're not going to use you. And they're going to cough up the big bucks. These are Fortune 500 companies. They have a lot of money to be able to spend. BP, $87 billion company, one of the largest oil and gas companies on the planet. They know that if Palantir makes them more efficient, they're able to more effectively drill and sell more oil, aka make more profits, which means they should continue to use Palantir. So I think it's a big vote of confidence, and it's a trend of companies we have seen sign on to more multi-year extensions with Palantir because of the ecosystem and value that Palantir has provided. The second piece of analysis here is that this is AIP starting to become monetized. So we still don't know what the average revenue per client is going to be in the next couple of quarters. I think right now it's closing in on like 3 million, 2.97 million. I think Bank of America has that going closer to like 4.5 million in the next couple of years. But that average revenue per client, along with more clients, is going to create top-line revenue growth for the business. Right now, we're growing at 27% year over year. In Q3, hopefully we hit that 30% number, which is going to be very important. That would be about $720 million of revenue in Q3. They guided for about $700 million. If Palantir can keep getting the average revenue per customer to go up, the way you get that to go up is you upsell them on AIP, and it's a hell of an upsell because of the value that AIP provides. But I think this is the beginning and the start of AIP monetization. We've been waiting for a while. We've had boot camps for the past 18 months. Boot camps obviously have been successful in terms of the go-to-market strategy and the deployment of customers finding value in those 2-3 day workshops and then signing on to deals. We saw in Q2 earnings that Shyam Sankar, CTO of Palantir, said, hey, we are getting customers within 7 days of a bootcamp that want to sign 7-figure deals. Well, if that's the case, the question now becomes, can you really monetize those customers with AIP in a way that grows the top line revenue of the business from 13% last year around this time to 30%? And I think that's what Palantir is doing. And that's also why they're getting the premium in terms of the stock, because they're one of the only AI companies that's actually showing AI-enabled SaaS growth, which is why some of the money is leaving the other SaaS names that are not showing the AI tailwind and going into Palantir, because they are obviously showing that momentum and growth in the top line revenue. So those are the two pieces of analysis I have. A, this is a vote of confidence by BP to extend the partnership even further, which is what has been happening with other clients that Palantir has had. And then B, AIP seems like it's on the track to begin monetization. Two clips I want to show before we hear from Matt Babin. So this is the former president of BP, or CEO, Bob Dudley, discussing how Palantir changed the company and why ultimately they needed to keep working with Palantir.
We had a number of problems in BP for a while. In the early part of the last decade, BP stood for big problems. We were dealing with the Gulf of Mexico spill and had issues. We had legal issues, and I won't go into that, but unbelievable. That's what opened up my eyes. Unbelievable ability to see data from all different directions, put it quickly, like within days, and visualize it. We realized how big our problems were at that point. But then I thought, this is amazing, because I used to be a production engineer in the North Sea, and I remember what it was like. You had your well file, and there was a geologist down the way, and it was offshore equipment data, 20 years of history on a well. I said, Alex, do you think your team could maybe simplify this process? So 2 intrepid Palantir people came in. I think they worked the weekend and came in, and they put this into some program you have. The engineers and the geologists and offshore were just amazed.
Again, that right there, when you see the CEO of a Fortune 500 company talking about what Palantir was able to do for them and take all that aggregate data back in, I think this started in the early 2010s, and actually build out what they've built out for them. It's just incredible, dude. It's just incredible. You can only imagine those employees so many years ago now seeing that company into the S&P 500 when they were trying to get their first real commercial client like BP. It's just an amazing journey, and we're seeing that momentum now with this 5-year extension. One more clip of Karp talking about how they provided value to BP. And what he says right here is very important in the context of software and oil and gas.
That was like a phase where data, like oil and gas, is the processing of it, and processing of it has to happen according to norms. And then you have an output. And now we're moving into a phase where that processing of the data is going to be done with algorithms. And you have lots of issues around that. So, you know, what's the handoff function for an algorithm? When is the algorithm deciding? When does a human decide? How do institutions that are regulated, like every institution, come to terms with that? Now we're moving into kind of from useless to political changing to potentially dominant. So the institutions, and we've seen this in the Ukraine war, and we see this in innovative industries like BP, but the institutions that actually can implement tech and now can interact with tech that implements itself. So more AI generating code, AI generating algorithms in the context of norms are the institutions that win. So it went from joke to cosmetic to changing your life without you realizing.
So right there, Karp's basically saying, hey, at the end of the day, this software is providing real value. And because it's providing real value, it's hard to not continue to use the software. And the question simply becomes, can the algorithms work in a way that is conducive with the actual data that is being aggregated and amalgamated within an organization, which could be trillions of bits of data, to somehow create a meaningful experience for the employees at the company, whether you're a subject domain expert or whether you're someone who's very technical, so that you know what you're doing when you're interacting with something like Palantir's ontology. Now leveraging AIP on top of that, it seems like this is going to be a really big partnership over the next 5 years, over the next 5 years after those 5 years, and continue to grow top line for Palantir. All right, last thing for today on the show, I'm going to attach the 7-minute clip of Matt Babin talking with Yahoo Finance about this deal. This is a really important partnership. He goes a little bit more in depth into why this partnership is happening. He talks a little bit about S&P 500 at the end as well. So hopefully you guys enjoy. Thank you for keeping up with the channel. Big day for shareholders, up 14% of the day, more than 100% year to date. Whatever happens to the stock is whatever happens to the stock, but this is one of those days where you sit back and realize Palantir's in the S&P 500, and it's been an exciting journey to see how they keep executing. Thank you, everybody. I'll see you guys on the next one.
A complete connected value chain, right? From reservoirs underground, up through their facilities, onshore or offshore, all the way to a refining or processing facility, all the way to an end customer. And so what they use our software for is all of the decisions along that chain. That's a complicated chain, and you can think of each decision you make along the way actually changes the decisions you can make downstream, right? So if you make one decision, that changes all of the other options that are available to you. What's new with this extension is layering AI on top of that underlying digital twin model of the entire business.
Gotcha. So it's extending in time, but also extending in scope of what you all are doing for BP.
Correct, yeah. So you can think of it as two main things. One is it connects people who have different area disciplines. So if you're a reservoir engineer and you're paying attention to what that subsurface reservoir is like, that's much different than sort of an operations or base management engineer thinking of how could I change the performance of this facility. But this gives you one pane of glass to look at and collaborate over that. So that's one thing where it enables people, without sacrificing any specificity of the questions they're asking or the work they're doing, to work together. The second is, how can you then run hundreds, thousands, millions of simulations on top of those questions you're asking in a secure way?
And one question I want to ask a question on the street, Matt, for you particularly, in the energy segment, and you're dealing with these energy companies. Is it often kind of one-time engagements, or no? What you're seeing is typically these are really now converting into long-term recurring revenue.
Yeah, I think the duration we've been working with them, a decade in, and we're signing up for 5 more years, says that these are long-term deals. We've founded the company to work on hard, mission-oriented problems. And those are places where our customers make decisions every single day. So, we've talked a lot about these boot camps, which are sort of 1 or 2 days, but then lead to long-term duration contracts.
Well, and we talk a lot about AI and sort of, obviously with the advent of large language models, there was a lot of talk about transformation, right? It sounds like what you're talking about is, and not to diminish what you're talking about, focused on efficiency, focusing on making operations better. Mm-hmm. Not that that's not going to be transformational in the longer term, but it's not like this sort of, overnight kind of change to the business.
Yeah, I think that's a good distinction. I think if you look at a lot of industries, energy being one of them, maybe 5 or 10 years ago, everyone was saying, I'm going to do a digital transformation project. Mm-hmm. And that's sort of like, well, why? Right? What's the real business problem you're trying to solve? And I think over the last 2 years, you've seen a lot of that in the AI space, right? I'm going to AI this problem. And we take we're contrarian in a lot of ways, but we take the view of, well, what's the core problem of your business, right? If the core problem of your business is, how can I produce more energy with safe operations and reduce emissions, that's the problem, right? And then the question is, how can I use technology, including AI, to improve the way I tackle that problem? And so, yes, on the edge, I think those look like marginal improvements, but if you get 1% better at what you're doing every single day, that's how we think you transform your core business.
And when you signed this expanded partnership with BP, Matt, I'm just curious, was there competition there? Was that a bake-off?
I think there's competition in software all the time,
yeah.
Right? I think your previous guests were speaking about sort of what everyone is trying to do in the space. The most frequent competition that we see are, I think in energy in particular, there was largely a choice between 2 ways of working. You could go to a hyperscaler and sort of have a horizontal infrastructure system when everyone went to the cloud, and then cobble together individual components of that yourself. Or you could buy bespoke software that did one particular thing. And what we do is say, you shouldn't have to make that choice. You should be able to scale while also being able to solve specific problems. You have PhD level experts in all of these component pieces of that workflow. They shouldn't have to trade off the power of their knowledge because of the tool set that they're using.
At some point, are there diminishing returns from, in other words, if you are improving efficiency analysis of a reservoir, for example, at some point you've done it, right? So then what?
Yeah, I don't think there are yet. And I think you can look at that in terms of, great, so let's take that example on the reservoir, right? The rocks are the rocks, right? And there's only so much you can do with those rocks. But if you can free up more time for people who are managing that asset to go do more exploratory activity, right? If you look at the sort of generative space of going into, well, what does carbon capture look like? What does using these reservoirs and these storage caverns underground look like for sort of new parts of the energy transition problem? I view it more as, I'm an economist by training, so it's what's the opportunity cost of spending time? So even if there's diminishing returns to one particular problem, you're freeing up more time to tackle new problems and add them into the mix, and that's what we see our customers.
Matt, you know, there are companies out there who would certainly like to compete for your customers, right? These companies, Microsoft, the Databricks, I mean, they're putting real effort into this. How do you see just the competitive landscape kind of evolving from here?
Yeah, I mean, I'm more focused on what we do than what other people do, because building great software takes your entire focus, I think.
And what do you think are your competitive advantages there?
I really think it's the depth and time we've put into the ontology, right? I mean, if you look at, again, let's use the example of BP. That pressure system, that's not just the nouns and the assets that they use, that's all the verbs between them, right? The actions that you take, the decisions that you make as a company. And so building that flexible framework for a data model for the way your company does business, if you do that part right, then you can layer anything on top.
I want to come back to what we were talking about in the beginning, that you guys are being added to the S&P 500, which I know is not in your purview, doesn't affect your day-to-day, but we were talking in the break just sort of about that milestone for the company. Is that something you guys are sort of talking about internally, excited about, or are you just really focused on what you're doing?
I mean, of course it's exciting, right? It's a big piece of news. There's three different ways that I think about it. I think the first one is just keeping it in the energy domain, right? The energy space is full of standards, right? There's safety standards, there's construction standards, and the rigor around meeting those standards is pretty high. I think the rigor that the index keeps on getting in is equally high. And we used to get asked all the time by energy companies when we were smaller and younger, okay, great, the tech looks fantastic, but I make decisions on decade timeframes. I'm going to be operating this field for a generation. Are you still going to be around? And I think that's sort of a signal to the market as a whole, but particularly in energy, like, yes, like we've met these standards and we're here to stay. I think the other is, someone who came out of the government space, who worked on the government side of our business, you don't have to choose between being a mission-oriented company and being a commercially successful company, right? We haven't sacrificed anything on our mission and our intent on the work we do on that side. As a personal employee, the work I have to do today and tomorrow is the same as it was if the announcement had been different on Friday. So nothing there changes at all.
Matt, thank you so much for joining the show today. That was great. We appreciate it.
Thanks for having me.